Assalamualaikum. How to get a business line of credit in 5 steps. A business line of credit is a handy way to access financing as needed rather than receiving a lump sum payment. Such as with the small business loan, business line of credit can help you manage cash flow by inventory or a pay off an unexpected expense. Better yet, you only pay interest on the amount you see, not the full approved credit line. While the application process varies depending on the specific lender, you you can follow these general steps to get business line credit. On desk, Bluevine National Finding. Deciding how much funding you need. When you apply for a business line credit, you will have to determine how much credit you have or you need. Available loan amounts depend on the lenders but typically range for $2,000 to $250,000 because you need pay interest on the full amount and only on what you use. It's acceptable to ask for higher limit than you will likely need as long as you don't get ready and spend more than you can afford. If you need access more funds after you receive your initial credit line, you can request a line of credit increase depending on your business revenue and credit history. The lender may approve this request to ask for collateral, something of value can reposes if you fail to repay the secure the line of credit. Check your eligibility. While there are different factors that lender consider, there are a few that are most vital, including credit history. Your credit history illustrates the likelihood of you defaulting. While most lenders require a personal credit score of around 680, some lenders accept scores as low as 850 to 600. However, the higher you score, the better chances you have to securing a lower rate to higher loan amount. Business revenue. Most lenders have a minimal annual or monthly business revenue requirement. This varies depending on the specific lender but can range anywhere from $10,000 per month to $250,000 per year. Time in business. Most banks require that the business have been operation for the least 1 or 2 years, but some online lenders may only require 6 months. The longer the business have been around, the more stable it looks. Potential lender and the lower interest rate you may receive. Research and compare lenders. Once you understand how much financing you need and your eligibility, it's time to research lenders that match with that information. Be sure to compare different lenders, maximum credit limits, repayment term, minimum requirements, and APR ranges too. These are few different types of institutions that we can apply to. Bank and credit union. Traditional lenders such as bank, credit union are typically best business owner with high credit score, lengthy business histories, and substantial annual revenue. New business may not qualify for loans through these institutions. Online lenders. Online lenders are best for business owners how many have lower credit scores, shorter business histories, and lower business revenue because online lenders typically approve riskier prospective borrowers. Interest rate may be higher than banks and credit unions. Gather required documents. Once you find your preferred lender, it's time to gather the necessary documents to prepare for the formal application process. This will usually include the following: personal and business tax return, business licenses, article incorporation, personal and business bank statement, profit and loss statement, financial statement, business plan, building lease. If you are unsure that documents are needed, contact the lender before applying. Submit your application. Last, submit your application online or in person. Turnaround time vary by lenders and it can take little as 5 minutes or as long as several days to get decision. Your lender may also require you to provide additional documentation after reviewing your application. Common information your lender may ask for including your name, business name, SS number, social security number, desired loan amount, loan purpose, business tax ID, annual revenue. If your loan approved, lender will send you loan or agreement to sign before issuing your line of credit you can draw from. Common business line of credit application mistakes. Like with any other loan application, it's paid to be accurate when you complete a business line of credit application. Make sure to double check the number, contact information, other relevant details before submitting. If you include an error, it could delay the process or hurt your chances to being approved. When listing your contact information, use an email address or phone number that is frequently checked. The lender may contact you with additional questions, so it's essential that you don't miss a phone call or email. Typical business line or credit cost and fees. Lenders that offer business line or credit charge a variety of fees and penalties. Before you finalize an application, compare fees and interest rate to ensure you are getting the best deal. Interest rate. When you draw money from the business line of credit, you will pay interest on the withdraw amount. The interest rate may be either variable or fixed. A fixed rate will stay the same throughout the life of the loan, while the variable rate will fluctuate depending on the overall market interest rate. Rate typically range from 10% to 99%. Draw fees. Some lenders may charge a draw fee which is incurred anytime you draw upon the line of credit. The draw fee varies based on the lender, but is usually between 1% and 2% the amount withdraw at the time. For example, if your line of credit has draw fee to 2% and you draw 10,000%, the draw fee or $200. Payment processing fee. Accessing your business line of credit will likely come with a payment processing fee. If you choose to have the money sent by wire transfer, this fee is usually between $15 and $35. You can typically avoid this fee by choosing standard ACH processing, but you may have to write an extra 1 or 2 business days to receive the fund. Late fee. The lender will usually charge a late fee if you miss the payment due date. This is typically a percentage of the payment amount and depending upon the particular lender. Termination fee. A line of credit typically has a fixed end date. If you want to close out of the line credit or before that date, you may have to pay termination fee between 1% and 2% of your loan amount. However, not all lenders charge a termination fee. Repayment penalty. If you repay the withdrawal amount ahead the schedule, some lenders may charge you have a repayment penalty, usually between 3% and 5% of the balance. Look for a lender that does not charge a repayment penalty.